Alright, what's up guys, Vlad Ethereum. So I'm making a part 3 of this series about Ethereum to $500. I'm trying to make this one a little bit shorter because it's not as much data to cover, and I think I simplified it better here. But basically, recently we've been talking about all the reasons why Ethereum in this bearish market cycle has not hit its bottom like a lot of other altcoins. And that doesn't necessarily mean that I'm calling for Bitcoin bottom. I'll explain that later, but right now I want to ask you to like and subscribe, posting daily technical analysis shorts and other things. Follow my Twitter as well. We just hit 500. That's kind of cool. And we just hit 300 subs on here. Hopefully I could get to 1,000 subs on here by my birthday, which is July 5th. This year I turned 20. Just real quick on my credibility, I've been doing this since 17. I started off in April 2021. I learned a lot since then, and I'm not just some, what's it called, uneducated, uninformed investor. I actually tried my best to study these things daily. I put in hours of work every week to collect new data and keep up with the TA and the market as it changes. Now, as we can move on from here. So these are all my platforms right now. As you can see, we've had a fair amount of growth on the YouTube channel since then. Since I've been uploading. Not a crazy difference, but I think that has to do with my consistency as well. And the amount of work that I put in trying to improve that. But it's been, my results have been showing with, even though how, not necessarily unorganized, but just the lack of consistency has messed up, I guess the growth. But it's not something I'm worried about because that's just, I'm 19 trying to run a business and manage my investments and work and live at the same time. So I'm not really trying to blame myself too much. I think it's playing out really well. But there's always room for improvement, right? So I want to just say that when I try to talk about these things, I don't try to moon boy. I don't try to be biased, right? I try to just say how it is with actual facts and data from multiple sources, not just some technical analysis on one chart that has a bullish pattern that isn't really, going to play out, or bearish pattern that isn't really going to play out. I try to actually back these things with more than one data point. So this isn't your typical crypto YouTuber behavior. They all try to call ridiculous fucking prices at the worst fucking times, and even when it makes sense, they just keep overvaluing to get more views, and I don't do that shit. So moving on. None of this is financial advice. I'm not a financial advisor. Do your own research. Check the disclaimer in the description. I'm stating my opinion here for myself that I practice, but that does not mean I am trying to convince you of my opinion. I'm just stating my opinion for me. But this does not mean that you have to copy, nor is it me wanting you to copy, right? It's just, if I have a point, I can come on here and say it without and prove to, that I believe in my case here. Moving on, right? So today we're talking about Ethereum total value locked. And the thing with the Ethereum total value locked is there's a lot of risk. Like we've talked about the Ethereum DeFi ecosystem with MakerDAO, right? I didn't necessarily talk about how it was backed by USDC. I may have mentioned it. I didn't write it down. Regardless, I did call that there was a lot of risk for the amount of DeFi locked there and in amounts, and how if that didn't play out in stability, as in maintaining that value locked, it would harm the Ethereum ecosystem. And so far it still has, right? Because nothing is stopping further contagion in regular banks where USDC stores more of their money. There's nothing stopping that. And one thing I want to bring up now is because MakerDAO, the reason why I don't like MakerDAO as in a stablecoin is, how do you have a stablecoin backed by a stablecoin, right? And the argument there is, well, just use Ethereum, and if it's too volatile, like, yeah, sure, right? but that just means you have to over collateralize. I think it's a simple solution. The demands might be more than what the average person would want to use MakerDAO for, but I think that's fine in the case of actually having collateral, right? Because as we've seen, Ethereum has dropped by so far like 75% at the low, right? And not only is it going to do that, it's going to retest that low and most likely break that low. So you're looking at an 85, 95, 93% drop. But as long as you collateralize over that, which they have failed to do in Ethereum, then you negate the risk as much as possible, and you don't have to back your stablecoin by a stablecoin that ultimately wants to be the only one, because you can't tell me that USDC wants MakerDAO to keep taking its market share in the long run. It wouldn't be good, right? If you know that you can take out competition easily just because they depend on you, then, I'm not saying that's something good to do, but that's business, right? Another thing I wanted to talk about, as in for the Ethereum capitulation and MakerDAO liquidity, as I talked about, I wasn't necessarily talking about MakerDAO, the DAI token, failing. I was more so talking about how MakerDAO, as Ethereum goes down, the liquidations, as they liquidate the ETH, then instantly, it could have a cascading effect, or contribute to the downside price action already happening, because it is $1 billion, or almost $1 billion locked up in the MakerDAO ecosystem, as I stated, and I'm not going to get into it too much in this video because I've already talked about it, right? But that's a point I wanted to make. But here's the twist here, right, is, okay, so if MakerDAO as a token is capitulating, my question is, now, how much is the total value locked in MakerDAO dependent on, how do I phrase this, right? So you have the ETH collateralization, but what happens if the token goes down, right? Does the smart contract, like, liquidate their ETH in that situation? Does it give it back? Does it give them a return back because the token network is failing and it gives them their ETH back? Or do they sell that ETH and liquidate to prop up their stablecoin ecosystem? And I'm not really sure which one of those realities it is. I'm going to have to investigate it. But regardless, liquidation of the 1.5 billion because of the stablecoin, not because of Ethereum collateralization failures, but because of the stablecoin operation failing, and the liquidation of that $1 billion is actually the worst case scenario that you know it's a risk, but it's not, you can't predict when that's going to happen. But as we have seen, that's how it's played out, right? So it's a different kind of risk now, in my opinion, and not even a different kind. There's just more risk, because what's still at risk is Ethereum capitulating and liquidations happening on ETH because people no longer want to back their DAO tokens with collateralization. And now what happens if you have both at the same time? And that's another reason why that question is too deep for this video. But moving on, so a lot of YouTubers bullshit in this space. They only talk about a couple charts, promote their narrative. There's only a few YouTubers like me in the space that I've seen actually compare multiple data points to prove a narrative and still not be biased by that narrative, because I can be completely wrong. However, I would still say, even if Ethereum doesn't make a new low, I do not believe it's going to outperform Bitcoin as of right now, because it is still Bitcoin season, regardless if Ethereum hits a new low. So, yeah. So today we're going to be looking at Ethereum dominance, the daily and the weekly time frame, total 3, the total crypto market cap, excluding Bitcoin, total 2, I meant to say. Total 3 excludes Bitcoin and Ethereum. I forgot to add that in the quotation or parentheses. It's fine. I'm going to be citing ultrasound.money, coin market cap. It's one of the sources. I didn't pull the images for that, but you can check that at any time. I don't find it really imperative that I have to have the images here, but you know the data's not going to change relative to the time frame that it exists, because you can still look at the past price action on the situations that I'll bring up CoinMarketCap in. But it's not about one chart. It's never about one chart. It's about how they all work together. Moving on. So I just want to say again, follow me, Wealth Building Genius. But anyway, so I documented all this data today, so it's as recent as possible. However, this has been playing out for a long time. Started writing notes on this probably 5 or 6, 7 days ago. Finally got around to making a video about it. But on the next slide is going to be the chart, but I'll explain it here. So we're talking about the Ethereum dominance. And if we retested on the 10th of March, the retest trendline support, so we're still heading up and we haven't broken it. The 200-day EMA and SMA came into support, so the moving averages came in, still trading above them. So that short-term positive strength in the price action, not necessarily bullish, but still a sign of strength. And the question on 2 days later, because right now we're trapped in a range between 19% and 19.77% for the past couple of weeks. My question is, on the daily time frame, are we going to be able to close above 19.77%? Because that's what we were trying to do on that day, because a lot of volume came in. And the other question is, how long is it going to be until we eventually retest 19%? Because I don't think it's a matter of if it doesn't. I think it's a matter of when, right? Because we're talking about total Ethereum value locked going on a downtrend. Therefore, the Ethereum dominance has to somewhat correlate. Now, it doesn't have to correlate exactly, but it has to correlate in some form of way, because its market share is being taken by Bitcoin because, you know, it is Bitcoin season. So moving on, right? So right now we have the market cap Ethereum dominance on the daily time frame. And you can see the support box, 19.77%, 19%. And then the 200-day EMA and SMA, you see the retest the second time where towards the edge of the 200-day EMA and SMA, the retest of that support line with the 200 moving averages coming in. But then you see at the top where I have circled, ultimately a failed close to head higher. So new resistance potentially. And it's a matter of if that's resistance and we're heading into an apex, then is this pattern gonna break sooner than we thought? Because recently I've been talking about how we have we had like 49 weeks in February, which is 70 days or something, right? But if this breaks way before, then we really only would have about 2-3 more weeks before we see more capitulation and the Ethereum dominance, right? But I think it might be a bit too early to say that that's gonna, you know, not hold again as support. But we would have to see a confirmed rejection to say, okay, right? But then on top of that, what if we just head sideways at a lower range, right? Because the 20-day, 200-day SMA and EMA can still come in as support even though you break the trend line, right? Moving on. So we're talking about it on the weekly time frame now because you want to zoom out and see what's happening month to month, but you want to have enough data to work with month to month. So that's why I chose the weekly. So the question on the week preceding, or I think is going the week of the 6th of March this year, was if, again, Ethereum dominance would break the local high of 19.77% and then confirm the rejection. As of right now, it has rejected, but it hasn't confirmed it because you want to see a second retest and rejection again after the first initial rejection. But right now, it has further rejected, or you want to see more break to the downside, which hasn't happened in this case either. The picture is going to be on the next slide. Moving on, when the trend line breaks, there's also the 200-week EMA under the trend line that is coming in as possible support, right? It hasn't really been tested like crazy under the trend line, if at all. So it's like, is that going to break or hold? And if that breaks, do we hold the 3-year support line? And if that breaks, then fuck. We might be looking at, because you can't just break the 3-year support line and, I don't think see consequences, right? Like, I think at the minimum you have to take note of that you broke a 3-year support. So I think in that case, we could see some new local lows for the past 3 years with Ethereum dominance, maybe even heading down to 10% or 8% or 7% is the worst case scenario here. Maybe a bit higher than 10, but I think I could see 12 or 13 or 14 easily. Moving on. So 3-year support line right there that I've been stating. You had the 200-week under the 3-year support line. And I didn't extend that support line, but nonetheless, it still is trending higher. And my thing is, regardless of how high it trends, it has a limit before the pattern. It has a limit to how high it can go as the pattern reaches the apex regardless. So it might come in at 16% if it doesn't break sooner, or even 16.5% if it doesn't break sooner. But I wouldn't say it comes in close within this ascending triangle that I believe isn't going to break out bullish like they do sometimes, because we've been seeing Ethereum dominance actually, in fact, facing more resistance than it did in the bull market. And a lot of people won't accept that, and that's okay. You just got to understand, if there's more resistance than you faced in the bull market and you couldn't head higher in the bull market with less clashing or what's the phrase? Resistance, I guess. Then what are your odds of doing the same thing with more resistance? Because it's not even about beating it. It's what can you do in the same scenario with the harder trend to fight. And that's why I believe this isn't going to break bullish. I believe that this is probably going to break to the downside and retest some of these support levels like we've already done. Moving on. You have the 200-week coming in. Like I said, it might do. And then you have some local lows from June in 2022, around 14%, which is why I can still see Ethereum dominance heading towards a potential, breaks to the next support level within the last 3 years, which would be, if you look at it, near 12%, 10%, right? So moving on. Ethereum total value lock. So here's my thing, right? The Ethereum total dominance is a percentage of the market cap liquidity, including Bitcoin. So that's 20% of the total market liquidity, right? And my thing is, if Bitcoin is taking its market share, right, you can't say that it's going to trend up against that, because Bitcoin is literally going into a prime time dominance moment, because as altcoins capitulate harder with less liquidity and more people sell off, volatility increases, further increasing the downside risk of these altcoins and valuations in itself. Right, so even with Ethereum dominance at 19%, okay, sure, it's maintaining 19%, but if the total crypto market cap has dropped by $3 trillion since the start, or $2 trillion, 3 to 1 trillion since the start of the bear market, your overall 20% market share percentage equivalent to US dollars has still gone down 66% just off the market cap itself, going down at a minimum of 66%, right? So that's something you kind of have to take into account. So there's that, right? And even if it headed up back higher to the higher low of 22.32, it doesn't matter because of what I just stated, right? So when you're looking at the other market cap that doesn't exclude, or that excludes Bitcoin, total 2, and you still see that market cap is still trending lower. You still see sell-offs, because then in that situation, it mostly represents the Ethereum ecosystem, because If you have the total 2 market cap, excluding Bitcoin, and that's at 5, basically. Well, I'm not going to guess. And that's at 572 billion, but the total Ethereum market cap is 400 billion. Then you kind of have to correlate how the Ethereum ecosystem and the other altcoins in their ecosystem is bringing each other down as Bitcoin takes most of their market share, right? Because it is a very risk-on time to hold anything outside of the Ethereum ecosystem or Bitcoin ecosystem, in my opinion. And just not anything in the Ethereum ecosystem. You can't be buying shitcoin ERC20s. If it's not Ethereum itself or something like Lil Pudgies or Pudgy Penguins or Azuki or Bored Ape Yacht Club, you're basically holding a pretty risky bag. Moving on to the breakdown of the total value locked: 400 billion, 21.55 billion in NFTs, 205 billion in Ethereum, and 173.1 billion in ERC20s. And these categories are actually divided even further upon how much liquidity is actually moving around. Because as we're going to see, basically a portion to 20, 30 to upwards of 50, 60, 70% of this liquidity isn't being traded. It's being either held or locked up in the event of a necessarily liquidity event. As we'll see with stable coins and Ethereum staking, as that takes up the total Ethereum market share of the 205 billion USD in ETH, right? It takes up its fair share because the total staked is 17.5 million, right? So that's, of course, a market share. If you have 120 ETH, only 100 ETH are actually liquid, and more might be going into, well, not even might, is going into the staking contracts, because people are predicting the Shanghai upgrade within the next coming months. But here's the thing, we don't know how soon that's going to be. And then you have the SEC and regulation. Are they going to get that done before the SEC is like, nah, you can't do that? Do they get that done so it can't be reversed in time? Nobody knows. That's just a regulatory risk. Moving on, looking into that data and its contents, we later find out that the total value locked has limited upside and more room to move lower in a downtrend, simply based upon a couple things like total 2, and we're going to dive into total 3, and in general, just the way that the liquidity and the total value locked is structured in a liquid format for the most part as of right now. So as we have here from ultrasound.money, total value secured, 0.4 trillion, 400 billion, all the data points, the 205 billion US in Ethereum, 173, and ERC20s are 21 billion in NFTs. And then you have the total 2 over here, and it's kind of messy, but this is just a quick price action breakdown. We're sitting at 572 billion, like I said, finding some support on the 200-day EMA and SMA, looking towards the 200-day SMA, the thinner blue line, the thinner light blue line, finding some recent support on the weekly time frame, coming in as slight support on that large wick to the downside and that moment of volatility, along with the descending channel, and ultimately facing resistance at the Bollinger Bands, the 20-week moving average with 2 standard deviations up, finding resistance on that, being able to, as of right now, head higher and close above the 50-day moving averages, right? Because as you can see, we have a touch point, but there's no close. I don't see any closes. And as you can see, at the $430 billion mark, we have a new low within the past couple of weeks, within the past recent 3-month, 4-month time frame. And this just indicates to me that if we're finding resistance on a lot of basic things, it's only a matter of time before the bulls get bearish again. And honestly, this distribution pattern, to what it looks like to me, plays out. Because if you know anything about Wyckoff accumulation, you know that there has to be a sign of strength to the upside. And then you have to develop a channel, and then you have to show signs of weakness, and then you finally close to the downside, and then you continue the trend. And I'm not going to go ahead and explain all that in this video, but that, in basic terms, distribution means larger investors in a market where there's a lot of liquidity to be taken advantage of, pumping up prices to encourage retail liquidity investors that are uninformed to buy at higher overvalued prices, so that they can afterwards continue to capitulate the prices downward and use the same logic to get them to sell to them at lows. And you might be asking me, how am I getting all this from, this chart? It's not just this chart, right? I've talked about Bitcoin whales, Ethereum whales. Not Ethereum whales yet, but I've talked about the Bitcoin whales above 1,000 Bitcoin to 10K Bitcoin, and everybody else that's retail with 100 or less. And whales above 1,000 are selling to retail investors. The retail investors are buying every fucking dip, and that's problematic, because what's going to happen is once they have expanded all their liquidity, they're not going to have any liquidity to buy the real bottom, if there is going to be one, or any other downside moves if there isn't a bottom. And what that does is squeeze out that last bit of retail investors that can't handle that downside price action, that capitulate in the worst moment of fear. And that's what you have to try. That's what we have to try to understand with this market flow structure and liquidity as it presents itself, right? Because although you might be saying, oh, Vlad, it's gaining support, it's ready to move higher. Okay, and, right? Fed is still in QT. You might be saying with the recent events that, oh, they're going to save the banking system. That hasn't even been tested yet, right? And if they still continue to do basis points, okay, and we still get the terminal rate of interest at inflation at 6%, okay, you think they're going to pivot right away? No, they do. They get to the point. They elevate, they stop adding basis points, but they keep the interest rate at that same interest level for months. And then by the time they start pivoting, something is broken and capitulation comes afterwards. And that has been a major trend in the S&P for the last 50 fucking years, right? If you want to just keep your vision exposed to just the crypto markets and ignore the general broader trend of how the Fed has basically influenced risk on assets and bonds and mortgage-backed securities and real estate and used car markets and commodities like crude oil, then you're ignoring the larger macro picture of what's what in the real world, right? Because crypto is going to take over a percentage of market share, but these other things are commodities and gain cash flow because they are also similar, not even similar, they have almost as much value when not overvalued, when it comes to dividends and actually investing in a company that can beat inflation and give you a return. In terms of upside, it's a completely different story because crypto, not even crypto, Bitcoin and Ethereum are still relatively small fish in the pool. 400 billion is a lot, but the S&P and real estate markets are multi-trillion-dollar markets on their own. And it's just a drop in the sand when it comes to what's actually happening in terms of liquidity from these market shares outside of Ethereum and Bitcoin. So you have to take those things also into consideration. You have to also take into consideration, I'd say, scenarios where there's not going to be liquidity. I mean, I said it, I think, already, but just in general, without the whales, even with the broader trends of everything getting more expensive and people losing their jobs, and the Fed is purposely trying to get unemployment up. If unemployment is at an all-time high, then that automatically means, I mean, just because we're in a different environment of them not handing out as much money, but it will actually be felt this time with the unemployment, because last time we had record unemployment, we had a lot of stimulus and protection by the government with a lot of services, but in this environment, they've cut that off. They're selling off on their balance sheets and raising interest rates, making it harder for banks to get money, and people are getting scared to the point where there's bank runs, almost bank runs, and they have to bail out banks, which unfortunately in the broader eye still makes risk on assets like, and I don't say risk on because I believe it's risk on. I say risk on because that's how the market behaves. And you're looking at the broader scale of what people consider to be a good investment in this space, and it is still mostly Bitcoin and Ethereum, because the market share dominance of Bitcoin and Ethereum is at least 65%, and you can't ignore that those are the biggest players. And even then, people are still skeptical because they don't know how to do math. So a part of this is just a regular adoption scheme. Moving on. So the total three, right, excluding Ethereum and Bitcoin, but includes ERC20s like altcoins, currently sits at 367 billion. ERC20s take up 173.1 billion of this market cap. And then if we do some math here, which is where I would say to you, if you have some questions on any of this data, refer to CoinMarketCap for this specific day on all these market caps, right? But 74 billion in USDT, 36 billion in USDC, 8 billion in Binance USD, 5 billion in DAI, 2 billion in TUSD, 700 million in USDD, 21.55 billion in NFTs. And when you do that math, you see all of that liquidity isn't really ERC20s that are all altcoins. These are altcoins, yes, but they are not altcoins that are meant to behave as such. They are meant to be stable ERC20s. So you're not going to see a ton of volatility unless, you know, the entire structure of these tokens comes down, which we have seen so far. But I mean in terms of on a daily basis, these market caps fluctuating, you know, negate how, you know, with what USDC just happened. I'm talking in terms of what people expect from these markets, right? They expect it to stay the same. Therefore, they don't buy stable coins to be profitable. They keep it there to lock it up, some in trades, but some to catch broader lows. And you got to accept that that's the case right now. As Ethereum becomes more volatile and as Bitcoin takes up more dominance, you know, as people realize that there's not as much upside to be had with these altcoins and the risk isn't worth the return, you can't expect at the minimum this liquidity to flow in alts, even if it did come back down, right? Because even if this liquidity did evaporate, it wouldn't go to something like Hex. It wouldn't go to something like fucking, what's a trash token on Ethereum? I don't know, SHIB, right? It would go to Bitcoin, Ethereum as commodities in their ecosystems. Now, moving on, right, you do the math, and then you get basically 150 billion at that 173 total ERC20s, because these are still ERC20s, but that data point includes stable coins for the 173, right? We're excluding what we were excluding here is all the other altcoin, because, you know, it's easier to just gather the data for the stable coins and the liquid JPEGs, subtract that data from the total ERC20 market cap to get the relative value of the non-stable and non-NFT real altcoins. So we get 23.55 billion. And what I have to say here is, in order to realize the gains and keep prices stable and fight sell-offs on top of that, is this really enough liquidity needed to do 3 of those things at once and fight the macro economy? Like, no, right? So while this is going to fluctuate, which I have seen a few days ago, this number was about 10 or 13, right? What is happening, in my opinion, this hasn't gone completely risk off yet. I feel like this may drop to very well 1 to 5 to 3 to 7 billion. I mean, 7 billion is definitely a question. Probably lower, right? Because not saying the market share leaves the network. I'm just saying that significantly less risk has to be negated for us to really feel capitulation. In terms of people realizing that there is not as much opportunity and this really is a bear market and we are not going to see new all-time highs for over a year and a half, if not 2, for some of these, because some of these altcoins will not come back. If you've seen XRP, if you've seen Bitcoin Cash, if you've seen a lot of these forks, Ethereum Classic, etc., some of these things that don't make new all-time highs, but they're good for trading to get liquidity out of them, and that's all they're good for, right? You notice those things, and you see that people, you know, ultimately still aren't scared enough if this market share is still over-allocated and overvalued, and has to fight the macro to keep prices stable, realize gains, and fight sell-offs. And I would go as far to argue that the NFT total value locked has to decrease, but I have to further investigate how that number is derived. But from what I've seen, a lot of the major players just went down in the NFT space. We have Doodles coming out with some fucking metaverse socks, like idiots, right? We have Artifact, you know, by Nike coming out with shit clothes, right? We have Moonbirds basically not doing jack shit again. And then you have some other projects that are ultimately holding up pretty well, but in no way, shape, or form moving up in terms of ETH value, and in no way, shape, or form moving up on USD value, and in no way, shape, or form moving up in terms of their Bitcoin pairs on the Ethereum Bitcoin chart in comparison, right? Not saying that the NFTs have to be on a chart. I'm saying that you take in the floor value of the NFT and then you compare that against Bitcoin, it's still not trending upwards, right? So this valuation has to be going down as well, I would say. And I think that number probably needs to drop by 50%. Now, my argument there is, how do you play the game of NFTs right now? And it's about understanding that you don't need to play the fucking game, actually. Because as a veteran in that space, I've seen a lot of shit go sideways. I've seen a lot of shit go up and down. I've seen a lot of the top projects and future quote-unquote blue chips fail before they even really started. And I've seen a lot of them try to execute things and just be dog at it. And I've seen only one project make it out of all of this by far. And if this project makes it past Q3, I'm bullish on it right now, but I really want to see this project move past Q3 of this year, because that would be most of the downside unless we face a recession. And in that case, I'm not sure if it would, but I would hope that in the best case scenario, that it could survive that, but I'm not worried about that because we're not even there. But that project is Pudgy Penguins. I have been calling that for months, but my thing is, I was calling it, and I ended up getting one around 0.15 ETH, 0.15, Not the big pudgies, the little pudgies. Big pudgies is the first collection, and little pudgies is the secondary collection. And in November, right after FTX, I bought one for 0.15. And I was looking at my portfolio valuations, and I was like, this is, even if it's just some of my portfolio, I still feel like there's more contagion to be had with FTX. And I was like, okay, these will probably drop by at least 50%. Fuck no, them bitches went on a 700% run. And I don't just mean some wick up, like it's been maintaining most of that by far. It's been maintaining that for like really, it has been maintaining that ridiculously good. That should have never happened in the market like this. Right, and you could argue that there's more liquidity and more dumb money, so that's the reason that happened. But here's the thing, with a brand like Pudgy Penguins, you're seeing organic reach. You're hitting literally 345K on Instagram, not botted at all. And people know it's not botted at all. And those people don't even know it's an NFT collection. And then on top of that, you're talking about getting in stores like Walmart and Target and all these retail stores. And getting on fucking shelves and shit. And you already are getting good press from essentially mass adoption. People that don't even know it's an NFT on Instagram. Bro, you're set. You're set. As long as they make it past Q3, they're doing tremendously well in the bull market. But that's just one example of a collection in the NFT space that beat the odds, but that's still one out of literally the 20 quote-unquote blue chips that came out of the last bull run. They're not even fucking blue chips anymore. They're just ass tokens. They're literally just ass tokens at this point, right? Moving on past that, you see something like Bored Ape Yacht Club, and you're like, yeah, it's a bull market dominator right now. But I would go as much out the way to say Pudgy Penguins will flip Bored Ape Yacht Club, just because Bored Ape Yacht Club is so notorious for being an NFT project already, and so many people have already dismissed that because they don't like the term NFTs. And you could argue and say that the technicals aren't bad and blah, blah, blah. The rep isn't good right now. The macro perspective isn't good right now on it. And if you can't accept that, then you're just not playing the game right. My logic also is with Bored Ape Yacht Club, how are you going to... It's the problem with Bored Ape Yacht Club isn't their execution. It's just literally a weird-ass project. Literally. It's literally just a weird-ass project. I mean, you can say art as much as you want. And I get it's a video game to some degree, but what the fuck does mass adoption have to do with the pool pass? Sewer pass? And then the end game is literally just it's just some cheeks. And it just says game over as a logo around that. And like it's a fart. And then you have a dookie pass. You have like a dookie key. Like, that's really the best you could come up with. And then I'm not saying that these things can't be executed on. I'm saying that a lot of people aren't gonna fuck with that shit, bro. Like that's pretty fucking reasonable. Right, that's pretty reasonable. I would go as far to say that like people gonna be like, what's a coda? I don't have time for this. And people are going to be like, yeah, you're supposed to get invested into the lore and blah, blah, blah. But I'm like, here's the thing. Your complexity doesn't help your profitability in terms of a simple market approach. And that is a weakness and a strength, right? Because they are able to really attract a super niche people, really weird niche of people that mess with the project heavy. But what they also aren't going to get is people that really don't want to mess with that on a larger majority scale, which is fair to say. And what I think Pudgy Penguins is going to do, because it appeals to more masses, and it doesn't come off as super nerdy, and you're actually talking about getting in stores. You're actually talking about overperforming ridiculously on your reach and organic reach and building a brand not just based around NFTs, but using the NFT as a gateway as from representation, but not just throwing it away, but looking at it from a basic adoption standpoint, then I think you really set yourself up really well to take Yuga's market share. I'm serious. Like, I think in the long run, Pudgy Penguins has a fair chance at fighting Bored Ape Yacht Club. Not even because they have all these different metaverse lands and all these new airdrops and a token and et cetera, just off a real IP value. You can't ignore that there's a real IP value around this, because I know we talk about IP plays, right? But nobody's really setting that up properly. Everybody has failed this far. And I think as of right now, Pudgy Penguins is the only one that has successfully gone forward to continue operating with their IP play. As of right now, literally, like you can't 3, 4, 5x in the bull market, maintain that for months, and there not be anything going on. Assuming that it's not, manipulation, but even whales can't manipulate something as small as that for months, because even if you have the ability to do that, people will see through the data at some point, right? But that's just not the case here. Moving on. Only that shit that I just said, only fluctuating 2.355 billion in order to realize gains, blah, 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 stable coins, blah, blah. On top of the altcoin market cap downtrend that is already making new lows every few months while Bitcoin goes into its season and enters an accumulation sideways year. And yes, this is going to sink, in my opinion, not financial advice. Here's the total 3. You have the 200-day EMA, 200-week EMA, 200-day SMA, 200-week SMA. And what you see here, again, the break on the total 3 to the upside. However, it doesn't go sideways as much as the total 2, which is because this is the real liquidity of the altcoins without the major players, and this is exactly how, for the most part, they are behaving. A lot of these charts really do look the same when it comes to a lot of their dominances and et cetera, because for their dominance to even be there, it has to depend on the total market cap. And how is their dominance going to increase if there is no cash flow into the market cap for altcoins only itself? So this is resulting in a fake out as of right now. I'm not saying we can't go sideways for a bit longer, but I would expect us to still continue the trend in that channel or in a different way to the downside in the same direction of that as that channel at some point. Moving on. So looking at the total value locked in Ethereum again, you have the 2.4 million stake, that's $27 billion, 104 million ETH, and free market / liquid, that's $166 billion, and then you get something like 180 billion or 200 billion, etc. Something like that. It's rough numbers. 100 and it's roughly the same number. Moving on, I have to get the data points for supply and profit and supply and loss, but what I was able to dig up without citing a source at the moment is 40% in profit, 60% at a loss. And what I believe isn't necessarily going to happen, I think both sides of these things are going to react differently based upon the market environment at the time. So if the Fed is doing QT heavily, right, I think people on the loss side, some people are going to react and try to hold on. Some people are going to react and try to sell off. Some people on the profit side, regardless of that, say they're in profit, so they keep it there. Some people are like, let me preserve these gains in profit and buy back lower. There's going to be a lot of different reactions, and there's no way to tell what's going to happen until it happens in that case, because there's at least like 10 different situations that can happen with Ethereum staking sell-off. And that also includes inflow, but that 5% a year in a volatile market isn't shit, because that's why we don't go to the banks. So in order to recap, TVL, 400 billion total value locked, 105 billion in ETH, total ETH, 7.4 million staked, 17.4 million. I don't know why there's no one. 17.4 million staked, 27 million, 104 million, and free ETH liquid. 173 billion in ERC20s, 149 billion in stables and NFTs. This leaves only 23.55 billion in real altcoin ERC20s. Again, to make profitable ERC20 prices, maintain and keep from capitulating or move higher, etc., as this fluctuates mostly to the downside. You have literally that amount of liquidity mostly on the downtrend as of right now, on top of Bitcoin taking its market share, on top of the macro telling people and having them believe and capitulate in fear, on top of actual liquidity being sucked out from risk on assets, including the S&P, and going into things with lower risk and not even yield, just lower risk, quote unquote, which isn't even really low risk. Everything has a fucking risk. But moving on. In conclusion, with the bearish structures being created in the dominance of Ethereum in total 3, less liquidity in ERC20s and stables with a lack of realized gains, this leads to the Ethereum total value locked downtrend, and this eventually contributes. It's not what causes it, but it is one contribution to Ethereum approaching new prices and lows between $500 to $700 and potentially lower depending on how the market reacts. But I believe at some point we are going to retest that low, just based upon it not retesting the June low as far. Like, we have no fucking support there. There's nothing, right? And to say that Ethereum for the first time in history is going to never retest its low like Bitcoin did, the odds are not in your favor. It's possible, but the odds are not in your favor. So I'm going to go with the odds that are actually in my favor, to say that Ethereum has to, at the minimum, retest the low, and most likely is going to break the low, because to get to that much momentum, you have to see real capitulation. Moving on, next video, probably talk about, there's a lot of things to talk about with the S&P and Ethereum lockup release, going into that more detail, talking about the Ethereum node count of 500,000, how much of those 500,000 nodes are actually centralized, regulation, bankruptcies, hard manipulation, black swans, bank runs, commodity prices increasing like crude oil. I mean, I've talked about that already in a short video. Nonetheless, just a really in-depth short video that's 1 minute. You can check that out. Moving on. So make sure to like and subscribe for the algorithm. That really helps out. Road to 1K. I think by the bull market, I'll be one of the top guys out there, just because like, I have facts, bro, like, legit. Now, this isn't financial advice though, as I've said before. Make sure to comment any new topics that you want to be covered in the next video, or questions about this video. Follow my Twitter as well, posting daily alpha every fucking day. Thanks for watching. Vlad.